In the FX quadrant today, take a look at the June British pound, which has had some sustained weakness despite being flat through the New York session today. On the lows, 124.66. That's only down 0.2% versus yesterday's settlement, which was around 124.90. On the upside, up about 1/3%, maybe a little bit more than that at 125.37, again versus yesterday's settlement, 124.90. Going back to late June of last year, the pound has dropped just short of 12.5% in value based off the futures move, which is, of course, versus the US dollar, including being lower 5 of the last 6 weeks. Now, when you look at the economic data recently that we've gotten out of the UK, British consumers increased borrowing by the most in 3 years over the months of February and March, according to data that would be typically a sign of solid demand, but now might reflect how cost of living expenses and inflation are starting to squeeze some households into deeper debt, which would be a bad sign for the overall economy, especially given some of the really high inflation numbers that they've had. It's not a good sign for the British pound. That's one way to look at it. It's also part of the reason the dollar has been so strong. The inflation figures are similar. The UK seems to have less flexibility in terms of rate moves. And speaking of rate moves, we do have a Bank of England rate decision tomorrow morning. 4th straight rate hike is expected. Andrew Bailey, the head of the Bank of England, recently said that the bank is walking, and this is a quote, a narrow path between growth and inflation, and implied the bank might be looking to take a more step-by-step approach and be a little bit less aggressive than perhaps the US Fed is planning on being, which also, by the way, against the US dollar would likely bring more weakness to the pound.